What's happening, financial coaches? It's Pete here. I want to talk to you today about why your credit score doesn't matter. It's kind of a loaded clickbait phrase there, but I want to explain what I see a lot. And sometimes when you're working with a financial coaching client and they are deeply in debt or they have a unique family situation, they have lost a loved one or whatever it might be, that there is a really critical problem in front of their face. I'll get to some specifics here. And the issue is that the problem, instead of being solved, is kicked down the road or handled in an indirect way or sometimes ignored because people obsess about a credit score. So what ended up happening here was that I had a client who had a lot of debt between her and her husband. They used their credit cards a lot, kind of a typical tale of, overspending, couldn't afford an iPad, but wanted one, couldn't afford a new car, but got it anyway. They thought maybe their income would outpace their spending at some point. But what ended up happening is the husband perished in an accident at work, actually. And he died and left his wife with all this debt and credit. So in the midst of trying to figure that out, after kind of getting past the initial shock of actually losing someone and trying to sort out what is left, and unfortunately he didn't have any life insurance or anything like this, and unfortunately the debt was in a joint account or in joint names, so the debt transferred to her as opposed to being in his name. That would have potentially alleviated her of the responsibility. She was saddled with all this debt and had no income, no life insurance. She didn't have a job because she was a stay-at-home wife at the time, right? And so the issue here was, all right, what we can do is we can do a number of things. We can start calling these creditors. We can explain the situation. We can try to come up with a payment plan. We can try to figure out if we can roll this into a single loan somewhere else while we're trying to find a job. Maybe we can get into debt management, whatever it is. Maybe we should look at bankruptcy and charging off this debt. Maybe we should just try to consolidate some of this and charge off some of it, whatever it might be, right? So there are all these things. But the issue was for her was that she's like, what is that going to do to my credit score? If I just don't pay on these debts, what's that going to do to my credit score? Instead of being focused on, listen, you are kind of in a critical emergency situation right now. We need to solve this. Instead of being obsessed with what the credit score is, and to be honest, the credit score is probably not great at this point anyway. Even if it goes down because of what we're going to do, we're going to charge off, we're going to be delinquent on debt or whatever may be parts of your strategy to keep the ship afloat, to keep food on the table, to keep a roof over your head, yourself clothed, keep yourself alive, basically. You do that first. That is the most important thing, right? Survival is the most important thing, as opposed to trying to preserve or trying to game the system around credit scores. The credit score is of itself nothing but a reflection of what is going on beneath the surface. A lot of times people think that they can kind of twirl this plate of credit score up here and all these other things kind of move the ball around down here and keep this credit score nice and safe. The credit score is not that dumb, if it doesn't see things working right, it's just a reflection of that. So instead of trying to work on the symptom, the outward numeric value that is representing what is going on here, what we want to do is we want to work on what's going on right here, right? Figure that out. And, I bring this up because that was a person I worked with years ago, but even in recent years, I've come across some people that are trying to figure out if they should just move out of their house, give that back to the bank because they lost a job. But what's that going to do to their credit score? All right. The issue is the credit score is going to reflect what's going on. And there's really no way to disconnect it. Don't worry about that. Don't be driven by that. Don't be driven because you see the number coming down. That just might happen. If you go into debt management, they're going to close those accounts that go into that consolidation. That is probably going to hurt your credit score. It's going to show less available credit. It is going to show closures of account. It's going to shrink the amount of credit you have and the amount of history that you have as well, because you're not going to build any credit history with those companies anymore. So yes, it's going down, but what you are doing is you are solving the underlying problem. You are addressing at least the underlying problem. And the credit score is just a reflection of that. So don't be driven by the reflection. Be driven by the reality. Focus on that. And that's why I tell people that the credit score is not important. The credit score isn't really relevant. Once we get things fixed, then we are going to build on that and try to restore that, try to build up that financial capacity again. And the credit score will reflect that at that point, right? So, what we need to do is we need to sometimes dig a little deeper to get ourselves out of that hole. And so, don't let the credit score drive you, because sometimes if you don't just do what you need to do and invest and get yourself out, it's going to just elongate and draw out the solution, and that may be really bad because of the interest that it's accumulating, or the amount of harm that it does, or the stress it puts you under, the debtors that are chasing you down, or the job that you can't get because you didn't pass a credit test, or whatever it might be. So don't worry about the credit score, worry about the problem. I hope that helps. See you later.